these people are joining.
Hi guys. Hi team. So that was just a check. Thank you all for joining us today. I think you've all taken the time out to meet our Chief Investment Officer. He will be joining with us in another 2-3 minutes before we can take over and address the current market situation that we are all here to discuss about. We have right now we have people joining in, so I'm just holding on to that. If you have any no questions, I we can see that there are multiple clients who have asked questions over the Google link that we had previously shared. If you have any doubts with regards to market, there are few questions that you would like to ask the investment officer. You can paste them on the comments, and we'll take it up as and when we cross that bridge. And probably at the end of the meeting also we will discuss in detail with regards to whatever that we have to take it up. Few things that we will be discussing today, of course, would be geopolitics situation with regards to the war, with regards to what's happening with the crude oil and other things, and even the cross asset performance. I know that in the last 6 to 8 months, if we had seen, we've had multiple precious metals that have given good returns as against what the market has delivered. In fact, even Nifty, Nasdaq, or even S&P 500 for that matter, or most of the questions that we got from the clients, or if we should stay invested or should we rebalance, the multiple questions that have come up, all of those would ideally be answered. And two other things that we will be discussing with regards to what are the decisions, are we making any decisions right now out of fear, or anything otherwise. That will also be something that we will be discussing. And the overall market outlook, of course, and the upcoming opportunities. I think the last 6 to 8 months, whatever profit that the market have given is already wiped out. We're currently in that 22,000 range. How do we go from here on is something that will also be discussed here. And in terms of what the team has been doing for the clients, in fact, in terms of multiple strategies that the clients would be aware of, in terms of flagship opportunities and momentum, where we blend all three strategies in order to ensure that the overall portfolio, at least if the market is falling, the portfolio doesn't fall at that range. That's something that I know we've been able to manage over the period of last 1.5 years, that we've been able to manage these clients in this market conditions. I think that's something we will be discussing in detail, like how we've been able to achieve in terms of profits even in a falling market is also something that would be addressed. The multiple questions that have come up, why in the last 1 month there has not been much momentum calls, also those are also certain things that will take it up and then do it. So I have my chief investment officer ready, who will take it forward from here. And like I said, any other questions with regards to market, please go ahead and drop it in our comments, and then we'll take it forward. Handing it.
Hello everyone. Good evening to all of you. Am I audible? Yes. Yeah. Thank you. So the main purpose of interaction is this current panicky mode, which is being prevalent now. And we thought of like, why don't we have a quick one-on-one or like webinar with all of us, so that we understand the gravity of the situation, and also do a course correction in case we are going wrong. So we'll just start with a small presentation, and that will be the Q&A session where we'll be addressing all of your concerns. Okay. Uh, so just going on. So this is all about navigating this market volatility. We all know that market is extremely volatile. And last 1 month after this see a significant drop in the market. Should we remain invested? Should we start divesting our portfolios? What should we do? Any further investment? Should we should we make, not make? All multiple questions are coming up. Okay. Hmm. Just I think one technical issue is there. Let us resolve. अच्छा उसके बिना ही करो आप सर इस पीपीटी तो मैं आ जाऊँ I hope you are able to see me. Okay, thank you. So moving on. So these are some of the questions which we got, like geopolitics, oil rates, what these shocks, how to manage, cross asset performance tracking. I mean, how these different asset classes are working on commodity side, on the gold, silver, crude, equity, debt, all those questions like stay invested or rebalance, actionable portfolios, and actionable portfolio and management steps, and our outlook and opportunities from here on. Okay, so moving on. Next, yeah. So this is a very high-level summary of our discussion. So these are the seven most important points which we thought of discussing. So external shock. This war is an external shock which we didn't predict it, because war cannot be predicted to a great extent. And because of this, the major problem that happened in the world is the oil flows. And when the energy flow stops, the entire industry and even the household activities get stopped. And because of that, you see that this stoppage of energy, especially from the Gulf region, has impacted our overall this ecosystem. And even Prime Minister told that we are going to be in the COVID type of severe situation if this persists, because what we understand is we have only say around a month or 1.5 months of energy left in the country in case we don't import further. Of course, like different discussions are going on to import from different countries of the world. So we believe like at least it should not go to the extreme severe level. Therefore, this is just in one external shock. This is not a structural collapse. Means our macro still remains intact. We'll just cover in the subsequent slides. Valuation reset is always healthy, because this gives us chance to further invest in the means stocks of our choice. The stocks which we will not be able to touch it for past few months, now they are at a very reasonable valuations. And oil, we are very closely watching the movement of these oil prices from $60 to like almost $110, now coming back to around 1995 levels. Is what all things are driving that. Gold and debt, they are performing. If you see last 1 year, gold has performed almost like 47-48%, though the peak performance has gone up to like around 80%. And silver has also performed somewhere around say 110%, which means doubled, though at one peak it was at 250%. So we are looking at all those things. FI selling is cyclical. There are two major factors which is driving FI selling. One, they cite the valuation of India as compared to the other emerging economies. Second is the continuous fall of rupee, because the gain made in the rupee uh, that basically offset the margins. So basically, if you see, just to give an example, if they invest say $100, which is equivalent to say 9,000 rupee, when they take out the money, even if they get more rupee, but in USD term it comes down. So that's why it means they are like looking at rupee versus USD fall to a great extent. Corrections are entry points as we discussed, and action over reaction. So basically, we have not given any sell call in last 4 weeks. what is the primary reason for that? It's not that these stocks are doing really well and that we want to sell, or they are extremely hopeless that we want to sell. It is just we know it's a temporary phenomena, and that's the reason like we are not reacting to this situation. So, investment thesis and strategic takeaway from our discussion is India's macro story is very much intact. We'll take you in the very next slide how this macro story is still alive. Valuation correction creates entry points. Diversification is delivering because anybody who did the diversification in commodities or multi-asset funds, we always recommend debt in our portfolio. So they are still delivering, but because of different reasons, people go for only equity. They think that equity is the only asset class which can deliver more, and that's the reason that in difficult situation they find this to be like this kind of panic question whether to stay invested or not. Domestic flows are structural flow. Means if you see 30,000 to 40,000 crores of SIPs are continuously getting pumped into the market. So there is no reason that market should fall to that extent. If you see the FIAs uh, are continuously selling, तो एफ आई जब बेचते हैं तो मार्केट आइडियली पहले बहुत फॉल हो जाता था. अब वो सिचुएशन नहीं है. डी आई आर गिविंग अ गुड क्वेश्चन. तो जितना एफ आई सेल करते हैं उससे ज़्यादा डी आई पंप करते हैं. तो we'll have certain other data points we'll cover in subsequent slides. और रेट साइकिल विल इवेंचुअली टर्न बिकॉज ये जो ग्लोबल इन्फ्लेशन है और यूएस आईएनआर का जो रेट है, all those things will also get normalized as soon as the war situation is getting controlled. So these are the 4 points actually we'll first discuss before we proceed further. India's macro. It is the fourth largest and fastest growing economy on the earth with a GDP of around 4.1 trillion. Our market capitalization is around 1.2 to 1.3 times of the GDP, which is around 5 trillion. If you see the structural condition of India, it has surpassed, say, UK, France, and Germany in last 10 years' time. So it is the most, I will say, the preferred destination for most of the worldwide investments. And if you see, the first trillion took almost 17 years to build, and subsequent 3 trillions, like every each trillion, then took like 7 years, 5 years, and now 3 years. So what we are projecting, like very soon, every year we will be adding one trillion more. And say if you apply a 9% CAGR, basically 7% of GDP, plus 1.3 times of the impact of the market capitalization to GDP, at 9%, this 4.1 trillion can go to 16 trillion, which is like almost 4x in next 17 years time. So the impact is immense. The wealth creation opportunities are massive. And if you see like wealth effect also, when per capita income increases, then the discretionary spend increases. What we saw like the necessity cost, which is the food, living, all those costs has come down, means as part of spend, and discretionary spend and investment has gone up so much. So that's why like if you see that $270 when per capita Indian income was there 45 years back, we're spending like 60-65% on the necessities. Now the clock has turned, and if you look at the developed nation, which India is also planning, like by 2047 we should be a विकसित भारत. तो हम जब विकसित भारत बन जाएंगे तब हमारा ये जो पर कैपिटा इनकम है वो करीब करीब $4,000 के पार हो जाना चाहिए. तो हमारा ये जो डिस्क्रिशनरी स्पेंड है दैट विल ग्रो फ्रॉम करेंट 60% टू अराउंड 80%. तो ऑल दोस इंडस्ट्रीज लाइक जहाँ डिस्क्रिशनरी स्पेंड है, चाहे वो हाई एंड कार्स हो, हमारे ऑटोमोबाइल्स हो, और जैसे स्कूटर्स, कंज्यूमर डिस्क्रिशनरी, टीवी, फ्रिज, travel spend, all those things will massively increase. And because of that, the wealth impact will create, and the entire BFSI industry will increase. So we see a huge spiral effect of this wealth, which is going to come. And anybody who is invested only, they only can take the benefit of this wealth. So I would say, like, if you look at some of the real data, like SUV, that sales has gone up from somewhere around 21% 10 years back to now around 65%. So out of every three cars, two cars are now SUVs, which was not the case 10 years back. Similarly, motorcycle makes, if you see the high CC engines, they have gone up from almost 35% to almost 70%. So wealth effect is tremendous. Headlines don't go into the current headlines. They are actually designed to scare you. These news agencies are selling their own product of scaring you, manipulate, creating manipulative narratives. जब वो बोलते हैं कि 15 लाख करोड़ वाइप आउट हो गया एक दिन में, अरे भाई, वाई दे से लाइक दैट? वो क्लियरली भी बोल सकते थे 2% मार्केट डाउन है, वो बड़ा बड़ा अमाउंट दिखा के दे जस्ट क्रिएट अ पैनिक ताकि उनका वो न्यूज़ चले. हाँ, एक अनरियलिस्टिक पेपर मनी जिसको कि ऐसा बता दें कि वाइप्ड आउट या ब्लड बाथ हो रहा है या सपोज करिए कोई मैसिव अटैक हुआ है स्टॉक मार्केट पे. दीज आर जस्ट नैरेटिव्स. एक्चुअल में कोई भी एक भी फैक्ट्री बंद नहीं हुई है. हाँ, एक भी इंडस्ट्री या कोई भी आईटी कंपनी बंद नहीं हुई है. वो सिर्फ इस तरह का पैनिक क्रिएट करते हैं. सो प्लीज डोंट गेट इनटू दैट. हाँ, वो आपको दिखाती है कि आपकी सर्वाइवल रिस्क में है. और पावर ऑफ कंपाउंडिंग यू ऑल नो, लाइक अगर हम कंसिस्टेंटली इन्वेस्टेड रहे और इवन 10% के अगर पे भी हमारा इन्वेस्टमेंट चले तो 30 साल में 17 गुना होता है. अगर 25% पे चले तो इट बिकम्स लाइक 807 टाइम्स. मीन्स यू कैन अंडरस्टैंड द पावर ऑफ कंपाउंडिंग. And if you see, we have come along so many years. We saw the Gulf War, 1990s May, then Kargil War, Trade Center, World Trade Center that dropped. Then we had this Mumbai attack, Pulwama attack, Russia, Ukraine, even COVID. So in all the phases, if you see, market drops and then bounce back very sharp. Even in COVID, it dropped so much but bounced back. So if you see the median drop versus the bounce back is around 30 to 40%, is 28 to 38%. That is the median bounce back in 3 to 6 months time. If you take average of all the events, so there's nothing to panic. Means we are sitting in March now. I'm sure as soon as we see war is getting controlled, this entire losses what all of us are facing now will convert into a healthy gains. So that's why it's a very good time to stay invested and keep adding your investments. If you see the anatomy of market correction, of course, geopolitical shock has jittered the world. But I will say, like, this is just one of the case. Don't think that this is the end of the world. Of course, we all have the pressure of this oil price surge worldwide. India's inflation can amplify, and all the other spiral effects can happen in terms of uh, see consumer demands come down and then earnings come down. But again, like if you see so far, not much of impact is there, and we see that it is a very much controllable asset, controllable situation as soon as we start importing from other areas of the world. This, if you see the US yields also have gone up to around 4% plus. Japan yields have gone up beyond 2%. We'll have some data points in coming slides. Because of that, people have started shifting to a safer asset where like assured incomes are available. And that has also created some drop in the equity market. If you see the valuation reset at a peak, we were somewhere around 23 P. Now it has come down to somewhere around 20x P for Nifty, which is also a good thing for us to enter. Because if you see, whenever it has touched 20 P, it has bounced back very sharply to 22 P in next 3 to 6 months time. That's the empirical data showing. FIs are selling. I told you like two major reason. One is the comparative between two countries, and second is the weakening rupee, uh, which again get controlled once the oil shock is absorbed. Because India is primarily a trade deficit country in terms of we import more of oil and export less of other commodities, and that's what if oil prices are increased from say all the way from 65 $65 to somewhere around $100 now. As soon as that shock is covered, we'll all come out shining. Trade pressures, of course, US tariffs, AI disruption in IT services, export moderation, we all have seen how this has impacted the stock market. Liquidity also getting tightened, the way global central bank is doing all the activities so that inflation is under control. Earning miss risk is there. Of course, we have high expectation with the India incorporation to do, but with this sudden oil price surge and to a certain extent some of the places where we have means even I will say the fear of people that there can be earning miss has also created some kind of market correction. Panic selling is again one of the major reason, and safe haven rotation, where like people keep moving their money from equity to gold, US bonds, and USD. So these all factors have led to a correction. I will say like multiple factors together has hit us, and that's how we got this correction of around 20 PE. If you see the crude versus market trend, geopolitically, whenever means events happened and crude has come down, market has gone up. Similarly, whenever crude has gone up, market has come down. So currently we are in this phase where crude has suddenly increased around $100, and see market drop is there. As soon as crude normalize and come back to somewhere around 60, 70 levels, market will see a sharp rebound, and that inverse relationship is very much there. See, wherever the crude price was down, this your markets were very much up. So this relationship is very much established. If you see the cross asset performance, of course, like equities are correcting, people have panic, but I will say like for long term investor there is no issue, because if you see you are not investing for a day or two, you are not a daily trader, you are a long term wealth builder. So I will say it's a very positive thing for long term investor. Debt bonds, I think I stable to little high. Gold, silver, you have seen the volatility, like silver gone up to 250%, now coming back to 100, 110%. Gold also has gone up from to somewhere around 85, 90%, now retraced back to 46%. Crude oil volatility we all are seeing, and USD INR also is like 94 plus. So that's the major reason. Like most of the asset class, if you see, are like moving in different direction. And equity correcting is the only panic area. That's why investors are here, and we are there to assure you that there is no panic for the medium term investor. In medium term to long term, it's all good. If you see for a day or week, of course, nobody knows how these things will move out. But of course, this is a very good time for all of us to remain invested and keep adding investments. These three structural tailwinds are like primarily the oil price shock, where oil has gone up to $120 per barrel, and higher for longer rates, which is like I told you, like bond yields have increased, and that's why like the lot of people have taken out money from equity to bond. And yen carry trade is another risk which we all carry, because yen was somewhere at around 0%. People used to take borrow money in yen and invest in equity. Now yen itself has gone up to 2.2. So in case they want to unwind that position, then they have to sell their equities. So that is the one risk we are still carrying. These are the headwind which are persisting. FI outflow we discussed why it is happening. If you see the valuation reset, peak Nifty P was 22 to 23x. Now we are somewhere around 20x, which means we are at a healthy, has drawn down, means gone down somewhere around 10 11% in last since peak. If you see last whenever we reached 26 200 to now somewhere around 23 200. And if you see the cause effect, pressure creates price falls, oil shock leads to inflation, that leads to rate cut delays and liquidity control. Higher discount rates also impacts the equity valuation compress, and mixed earning versus expectation. So if you see, these are the typical cause effect for P compression. Whereas India's resilience as response to that is GDP structurally high, Today's newspaper also was telling India's GDP should grow at 7.1%. Corporate earnings are very much in line with our estimates. We'll also cover Q3 very soon. Banking stress, the entire balance sheet of the banks have been cleared up. A lot of policy framework has been done, like GST, PLI schemes, and so on. And large cap are like more stable if you see as compared to our medium and small cap. These are some of the empirical data, like Nifty 11% down, small caps are like almost 18% down from their peak. Gold is also retracing back from the peak. So these are some of the, see, together like equity and gold both are falling. So these are very rare case. Generally they move in the opposite direction. But this is the time of volatility we know. Like people want to have more and more cash so that they take the opportunity of investment. So at this time, people are looking for investment opportunity rather than exiting. So the same thing should be applied for all of us. I'll skip the rest of it because you can see how these things have moved. This is a graphical presentation. Stay invested or rebalance. In long term, definitely stay invested. There is no question of not staying invested. Corrections are normal. We have seen multiple correction, missing recovery, because that's the biggest risk. And we'll see like how few days of missing impacts so much of return in long term. Continuous SIPs. Rebalancing, if you see in medium term, if you are a medium term investor, like don't take very aggressive bets. Trim very overweight equity position, and a little bit of your proportion of investment should be the gold and debt also. And in short term, because of the volatility, we suggest like should short term should be very short term in that case, where like you reduce your equity, which many people have done in the world to preserve their capital in cash. But the purpose may be different. Some are for reinvestment, and if your motto is more on the consumption side that you have to take that money out, then we have to be prepared for that. But that's more of a tactical move. Okay, moving on. Behavioral alpha volatility is normal, so don't worry about that. 10-15% we have seen multiple times drop. Don't react to noises. That's what we discuss. News channels are for that only. Selling low means we are like locking our losses, which we should avoid, because one person's loss is actually other person's gain. If you are selling, somebody is buying, which means they're making the gain on your entire investments. Stick to your long-term plan. Have your asset allocation in place, and remain invested. SIPs are your superpower. Continuously keep investing. Don't put all the money in one go. And goals drive portfolio, not indices. So we all have long-term goals. So please always keep in focus of those goals, and don't just get panicked with this kind of temporary market phenomena. This is what we discussed in terms of volatility, correction, and structural story, and where we find opportunities. Some people ask like, is it better to invest in large cap than small cap? Definitely yes, because these are stronger balance sheet companies with a quality business and better risk reward perception. Select mid caps in specific segments. We can, of course, keep investing for getting the right growth, because these are the growth companies which carry the growth. Uh, then few sectors when it comes to thematic, pharma and healthcare seems very promising, especially with some of the these themes which are playing out, like CDMO, contract delivery, and manufacturing opportunities, uh, active this pharma ingredients, and this some of the patents which are expiring will lead to many other companies creating those kind of drugs and distribute both domestically and export. So pharma is one. Manufacturing, especially like EMS, where like chip shortages are there. Electronic manufacturing, where like mobiles and appliance manufacturing. And AI and data center, where like huge investment is going in data center, especially in India's eastern part, like Andhra and those places. So a lot of companies has to come together to create those massive infrastructure, like construction company, electrical companies, cooling companies, power companies. So there is a thematic AI and data center this opportunity. So what we are thinking to create basically a package is there, which is a surprise package for all of you, which we will disclose at the end of this discussion about these themes. So, in terms of some of the actionable item for our portfolio management, please review your allocation, how much debt and gold and other things are there. Shift to your quality equity. Don't remain invested in penny stock. Continuous your SIP. Increase your fixed income allocation. uh, Keep tactical cash, small portion of this investment in gold. Avoid over trading. Only 20 to 30 days of trading in a year is more than sufficient to make sufficient wealth. Align your goal with time horizon and eliminate any weak position, which is like extremely broken fundamental. We have done thousands of portfolio reviews and saw that many people just in the I would say the greed of getting more and more faster income, they have invested in smaller companies or penny stock, which never comes back. So avoid those. These are like Q3 positions. Nifty overall, like if you see, excluding financials, has grown 8.4% year on year. Revenue has also been 5% quarter on quarter. So every quarter, 5% increase, like 20% annually, 20% plus. PAT grew 9.6% year on year, and similarly on quarter side, it was like 15%. It's a very healthy growth which we saw in Q3, and Q4 should be better than that. That's our thought. Metals drove most of the rally last time, and we hope this metal and some of the other things which are playing out will play continuously in future. This is our Q3 summary, like how this different Nifty 50 has been like 9 and 5. These are your year on year and quarter on quarter, means increase in earnings. These are your sales. Similarly, Nifty financials. If you see, everything has been growing, nothing is degrowing. And at a quarter on quarter level, if you see, these are really good. Means 5% growth, means every quarter, if you see, is means 20% plus every year. So this means India incorporation is very much performing. This is the bond yield which we are talking. US bond yield has crossed 4%. Similarly, Japan has crossed 2.2%. So as soon as bond yield goes up, means equity comes down, and these are going to reverse. That's the natural habitat. Means US bond has to be like somewhere around 2%, and Japan has to be less than 1%. So once that happens, if you are invested, then only you can get the benefit of that. These are Nifty valuation trend. Means if you see at the peak, means peak ratio has gone in some cases like 24 plus, but now it has come down somewhere around 20. So whenever it has come down to 20, you see multiple places, it has retraced back. Then 20, then retraced back. So it if you see multiple areas are there where like it has come down and gone up. So these are our Q3 scorecards. Market cap growth consistently outpaces your GDP growth, which we told. Like if you see, like worldwide, in last 20 years, GDP grew 5%, but market cap grew 7%. Similarly, in India, GDP grew 9%, but market capitalization grew 14%, and so on and so forth. Like 5 year, if you see, GDP growth was 7%, but market cap was 25%. So market capitalization always outpaces GDP, and that happens. India is already growing GDP at 7%. Just think about the market capitalization that can be in coming period. And this is the area which we want to just focus, that whenever there was a downturn, means Nifty 50, suppose 6.9% drop has happened, uh, but stocks which are means percentage stock that were down was 64%, and median drawdown was 13%. This is the Nifty 50. But if you look at the say Nifty 500, which is like broadly mid caps, uh, in that, like minus 8.7% has led to 28% of median drawdown, and 75% of the stocks were down. Whereas if you go to small cap, means it has been like pathetic, like 35% drawdown has happened for a 17% drop in index, and almost like 78% of the stocks went down. So this happens. So don't get panicked. And this is normal actually. So market reward patience, not panic. The correction is driven by external shock. India's fundamentals very much intact. We are a growing economy. We are a very fundamentally strong country, and it has a pure vision of like next by 2025 we should be a Viksit Bharat. Valuation resetting to healthier levels, creating opportunities. So please remain invested and add additional investment. Gold, debt, and domestic SIPs should are performing exactly as perform portfolio buffer should. And so, if you see, some of the people have asked us about the gold, how this is going to be. If you see the many this research report, in long run, gold has a very means upward moving chart, whereas if you see in short term when it goes very fast very high then it drops. So never get panicked with those drops. In long run it has a means continuous going upward trend. So framework is simple. If your equity value has come down, this means you have to add more and more means investment into equity so that your percentages are back to normal, which is the main crux of asset allocation. So remain in means discipline and respect your asset allocation. Long-term wealth creation require conviction, and forget about this small panic period where some war is going on, and this will go off. But the people who are there in the market will only get the benefit of it. And the last surprise pack is that we have created certain thematic satellite portfolio to accelerate our returns in coming period. So in those thematic, what where we are more bullish is on the see manufacturing side, especially the chip side, EMS, electronic manufacturing side. We are very bullish on the AI data center, especially the infra and the other support features which are going into the data like your software, the integrators, the power, the cables, all those things, cooling products. Then we have pharma. Pharma is like I will say the blood bath because India is the pharmacy of the world. So pharma is also a portfolio. So you will get the satellite portfolio in your app very soon, and we will be able to accelerate our returns by investing more into this thematic thing. And this is our QR code. You can download our app and enjoy the benefit of this stack wills, this entire stock analysis and the power of wealth creation. So, as we have reached to our end of our presentation, we invite everyone to ask any question they have so that we are happy to answer them. You can send on chats.
So we got three questions now.
Uh,
Three questions and
I think someone has sent a question. Where do we see market in 2030? See, as the India's growth story is intact, we see a 7% plus GDP growth. Along with that, the inflation and other factors get added. We will definitely have a double-digit growth, somewhere in the range of 12 to 15% year on year. And the thing which seems very difficult at this stage that whether we'll ever reach 30,000 Nifty and all this is very much doable. In fact, if you ask me, like in next 2 to 3 years, definitely we should cross those levels. And specific stocks, because when we invest in specific stocks they grow much faster than the Nifty or overall index. So if you are investing, rebalancing as and when told, and basically focusing on the asset allocation part, definitely you will be making much more money than what a index is giving. Our second question is on sector. So on sector, uh,
which sector would you sector invest?
Yeah, so sector, yeah, means definitely means we are very bullish on the manufacturing, uh, and some of the EMS manufacturing company, electronic manufacturing company, capital goods company, they should perform well, because there is a structural demand. India government is also supporting the various schemes are there, PLI and other schemes, which is also supporting the manufacturer. So all those factors leading to the growth, and we see a healthy growth that's coming in the manufacturing sector. Similarly, on the some specific selective infra, like your data center related, which are new themes, and a lot of investment is going into that. A lot of foreign investment is coming. So anybody who is concerned with that data center related entire infra pack, be it a building or a air conditioning system, power system, and software racks and so on, so they all will get benefited. Third sector is pharma. We feel like pharma sector is at its breakout, and we should have a very healthy opportunities in pharma, because if you see some of the patents of the worldwide pharma drugs are getting expired now. So you must have read in the newspaper that Semelgate is going to expire very soon, which is mainly uh, a fat reduction or a therapeutic medicine. And if that get opened up, it will create thousands of crores of big new business for the pharma industry. The others are like financials. Definitely, when the stock market will grow, all the allied industries like banking, wealth management, all those things will grow accordingly. So, if you must have seen the growth in BSC, NSC, and even the stockbrokers, like recently Grow came, along with that Angel One gone up. So the entire that BFSI pack will get benefited. So and of course, like when the money is there in the hand of people, they'll spend on discretionary like auto. Means all the entire auto pack we are thinking should grow up from here. And power, we are power hungry country. There's so much of growth happening that power is very much needed for most of the industry, and especially what we saw in the Gulf War now, we're creating more and more alternative power like solar, wind, nuclear, to cover up the energy shortages. So these are some of the sectors which we are very bullish on. Our next question comes for how the market will be in coming 5 to 10 years down the line, and also if market can come to 18,000 levels. Very good question, both side you're asking. So 18% means around 5,000 points down, which is somewhere 20% drop from the current level, which is extremely unlikely. Unless the entire world goes into a recession, there are major cause that um, means long term lockdowns are there, and things are not moving, peoples are not moving, the entire demand has gone out. In those situations only we can come down to a further 20% kind of drop, uh, which which is very unlikely if you ask me at this current stage. Again, like nobody's predicted future, but extremely unlikely. And in terms of next 5 to 10 years time, we are very bullish on market. It's a real wealth creator, a real wealth compounder market. If you remain invested, so much of liquidity flows, so much of growth is happening, so much of earnings is happening, and P expansion is happening. If you add everything, means in normal situation, um, I will say like 20% plus should be very much possible for most of the people every year CAGR basis, which means like in next 5 years we'll be like doubling our market or beyond that. And in next year 10 years, like definitely 4 to 5 times. We are very bullish on the market. Our next question comes on precious metals. So, if you see precious metals in terms of volatility, has shown us very much volatility. But understand the fundamentals of precious metal. Precious metals are asset class which don't give any dividends. which don't have any kind of financials attached to it. You cannot study a balance sheet, like in the case of company, where you know what kind of dividend it is giving, what kind of asset, liability, income, losses. You can only hold them for capital gains, not for cash flows. So that's why we suggest like precious metal exposure should be good, but should not be more than 10% of the overall portfolio. And what we feel in the longer term, your gold graph is very high because that is the alternative asset for equity. Means in case equity divestment happens, then people put their money either in gold or real estate. So demand will continue, and that's how, especially in the case of this kind of uncertainty which is created because of tariff, USD, de-dollarization, many central banks of the world is buying gold, holding gold. So gold becomes a currency of this entire volatility. So in such a situation, means gold should go up. Definitely means don't get swayed away by what happened to gold in last few days. And these are more on the liquidity side of the means reaction. But in longer terms, gold has a upward moving graph only.
Next question.
Will Enviro come up again? I think you're talking about Enviro, this stock. Yeah, definitely means this is a pure infrastructure stock, if you see. And means what happens when the market falls, because of the sentiments, many things fall. If you see the chart of Enviro, it has fallen drastically over like past 6 to 8 months time. It was one of our favorite stock. We put it in our portfolio for some time. But if you look at some of the means real fundamental details of the Enviro, your stock is currently trading at a PE of 12, which is significantly lower than your even large cap Nifty PE, which is at 20. So, if you see the growth rate is so high that PE to growth, PEG, what we say, is 0.17, which means like it is really valuable, I will say, a stock at this time to enter. And in our view, means from here it will significantly come back and come back, giving you a healthy return in coming time. So if you are holding, please keep holding. Don't get panicked and don't sell those Enviro at this point in time. So let this stock perform. And if you see this kind of stock, even if you see the last year, past year also, until February, March, many stocks have come down. And then in next 2 quarters to 3 quarters of result, this has gone up to like 50-60% also. So please stay invested. One of our friend is asking, do retail investor lose money because market fall or because they react wrong when market falls? A very good question. In fact, you understood the nerves of it. So market will keep going up and down, but you should not react to it. Your response should be appropriate, that when it goes down, you should not do a panic selling. In fact, it is an opportunity. So don't look at what happened to your current portfolio just. Look at what you can build from here. Of course, current portfolio will come back to its normalcy because ultimately normalcy is the way of life. And whatever you put now at this lower valuation will keep giving you the long-term benefits. Then looking at the next question, will defense sector rise from here? Definitely, defense is a very prominent sector. In fact, if you see the kind of government support that is coming, India very soon is becoming net defense exporter from a defense importer, which means our export will be more than import. We got orders from Philippines, we got orders from now Indonesia. After this Indo-Pak war, we're getting many orders from rest of the world, especially African countries and other countries, that they are now relying the Indian firepower, both in terms of missile, aircraft, and the entire defense pack. So this industry has a huge runaway, and many large companies like your Adani's, L&T, they all have started investing in that. So this particular industry can grow very much from here. What sectors are showing early signs of leadership for next rally? Of course, like if you ask me, early signs of leadership will come definitely from one is manufacturing, second is pharma, and then BFSI. So these are the area like, and especially if you see the investment where it is going, means of course like you will get the data center pack as part of our satellite portfolio. That the stocks identified in that also has a very high potential to go up because of the way the world is moving to India as a data center hub, and India is also trying to contain all its data because India is the largest consumer of data uh, in terms of telecom, and it generates maximum data from those things. So we want to keep this sovereign data intact in India, and there the growth is going to come. Uh, Copper and zinc rather than metals to be added in portfolio for upcoming time period. See, these copper and zinc, if you see, has a major usage in industrial. They don't have a holding value for central bank and even for people. Very less people only invest in copper as an investment asset. So again, like they move along with industry. So there can be a normalization in both copper and zinc, like Hindalco, Nalco. If you see those companies who deals in copper, Hindustan Copper Limited, they have shown a good rally during the metal rally. Now, which is getting normalized. So I would suggest like um, if you want a normal returns for from copper and zinc, then only we will select those companies, and that again depend on cycle, how they perform, finally like their performance and the overall industry response to that matters. So we'll check and decide how these things do in the end of March because then not make right kind of returns. Then what when FIs will enter in India? See, FIs will enter in India very soon because now the valuation correction is happening, which was one of the concern for FIs. If you see two things, one was valuation correction, value correction, which is on the PE side, which they understand, and second is more on the this USD to INR this rates because from all the way from 80, 82 to 94 we reached in around 1 year time, which is like almost 12-13% drop. So if they have made a 12% gain in India, that is completely wiped out in USD terms. So as soon as this oil pressure or the pricing impact of oil comes down, uh, INR will come down to its normalcy, and we believe like once INR stabilizes, then FIs will also come back. Then we have there are metals to be added in our portfolio. We have already responded. When FIs, okay. In the falling market, I am buying a new high conviction stock using cash but holding beaten down stock with intact fundamentals. Should I wait or exit or rebalance? Build gold to 10% now or gradually? See, none of the investment should be impromptu. You should only invest in a gradual manner. So, if you are holding on to some of the fundamental stock, please don't divest them and keep on investing, whether it's equity or gold, in a staggered manner. So, don't means end up your cash in a impromptu buying. Then we have question from Sunil. He is asking, considering the recent volatility driven by global macroeconomic factor, geopolitical tensions, and domestic reform, which sector in the stock market is showing the strongest growth potential? See, whenever there is a war-like situation, defense always comes first. Of course, since India is not directly involved in this war, means India is not exporting, but the general demand for defense product worldwide goes up. and that is a sector which has shown a lot of prominence, and that will continue to do that for in near future, because we have seen multiple wars in last couple of years, starting from Russia Ukraine to uh, you can say small war between Vietnam Thailand, and then Pakistan Iran. So many wars are getting fought, so defense will definitely be a preferred stock, but EMS and I will say data center are the growth engines. So there the things will be definitely invested. We have our investments planned for pharma and financials. All those things we'll definitely consider and keep evaluating and suggesting you what to do with those stocks. I think we come to an end because there's no more question. So I would suggest like you all should go to our app. We keep sending so much of notifications, so much of news, so much of rebalancing ideas, and make best use of this app. And especially now we are now living in the end of March. Hence, the entire tax planning should be done. Tax harvesting, which is like 1,25,000 rupees of long-term capital gains. If you have not booked, please book it, because you are not going to pay even 1 rupee tax on that. Similarly, if you have a gain in short term, then please book some other short term losses so that these offset each other, and you don't pay any money on the these short term gains. Just other point is that if you already have a short term loss somewhere sitting, or you can adjust that with long term gains also. That is also allowed. So in case your long term gains are there, please you can also plan short term loss booking to adjust that, and you can save a lot of tax money on that. With this, we are some question has come. Is it a good time to invest in mutual fund? Definitely yes. Please continue your investments in a mutual fund. Continue your SIPs. Then some question is asking. Already 4 to 5% high on that day. All the time it went down. See, we create our portfolio after analyzing all multiple factors. We have a entire means portfolio creation parameters. We look at everything, and see stock coming down or going up in a very short term is just more of a price impact. It's a price function. But in long term, we check the fundamentals, we check the momentum, we check all the other aspects to ensure that it should not go down. And definitely, we have high conviction that these stocks will give you a good return. So please stay invested. So with that, I hand over the screen to Mr. Ankit. He's our research head. Ankit, over to you.
Hi guys. So as Niranjan sir gave you grateful insights, so just a second. Ha. So as you guys know, this is the right time to double down your investments in the right stocks and right sectors, leading sectors, I would say. And we can help you with that. And download our app and to get the personalized stock and portfolio. Thank you so much. And today we'll end it here only. See you again. Bye. Yeah.